What's up, guys? Sam here, and I'll be doing the premium video for Friday, February 7th, 2025. So getting this one out a little bit before the market closes here, about 3 hours before the market closes, but I don't actually think it's going to change all that much in terms of what we're going to talk about in this video. It'd have to be pretty dramatic upside or downside, frankly, for anything to change. So let's dive in. Honestly, there's not going to be a lot of changes here from the last two videos that we've had together, where it continues to be kind of just this really tight trading range up here on SPY. And if you look at something like ES, which is the ES futures, the SPX futures, it actually is starting to build a weekly squeeze on SPY. Or on ES, I should say. On the SPY itself, there is a 2-day squeeze, a 3-day squeeze, a 4-hour squeeze, and on the futures, there's all those squeezes plus a weekly squeeze. So very tight compression up here, and we can color it in 100 different ways, but in reality, you just really have kind of this very large trading range that the market has not been able to escape out of. So let's just kind of cover the things that have changed, and we'll kind of go from there. So a couple things here is, one, this pattern here, until it is actually able to get above this 610 level, is always going to be a little bit vulnerable. I'd like to think that there is a setup here for a blow off top, like we've been talking about in these videos, but as it sits right now as I write this, it could really very quickly flip. Like just 1 or 2 down days, of substantial size would flip the pattern. And you don't have really that strong of a signal here, right? You have no trend in a red MACD. And so we've seen much better squeezes and much better scores. Now, of course, being that it is still a bullish squeeze on the daily, or excuse me, a bullish score on the daily, and a max bull on the weekly, I do have to err on the side of being bullish because the indicators would only allow that. But I just want to be really clear that the 2-day and the 3-day squeeze here, just one bad week could actually flip that and actually flip it negative. So it's an interesting spot also because if you're going to get a blow off top, there typically needs to be a period of uncertainty leading up to that. And then everyone who was uncertain inside of this large trading range then ends up having to get bought in or stopped out in the event that it goes, right? So at least for now, there's a higher bias on the indexes, but just leave a little bit of room for pretty much anything, because when you have this level of compression, pretty much anything goes. Let's go to the QQQ next real quick. And then I want to really focus in on with you guys on the most important chart, which I always talk to you about, which is the Mag7 Index, which is the most important stocks on the planet, and the level of compression that we're seeing there. So here on the QQQ, same thing. If anything, it's actually slightly weaker than the SPY, because this is not a bullish score, it's just a neutral score, which again you can kind of see from the basically you're going nowhere, right? This thing just continues to kind of retrace its own steps over and over again. And on the weekly chart, whereas the SPY was max bull, this one's only bull plus, so it's not maxed out. So again, anything goes here, right? When you have a trading range like this, just 1 or 2 bad days, completely could kind of take you back into the bottom of the range. One good day would take the top off the range, so not really a ton to see there. I don't want to necessarily just pad the video with content that I don't necessarily think is overly helpful, because we have, much like the market, retraced our steps over and over in the video. So let's dive into the real meaty part of this, which is going to be this guy here, which is the Mag7 Index. So here you have a gigantic squeeze. You also have a 2-day and a 3-day squeeze on the back of it. Now, I do want to be very upfront and clear about this. We have seen much better squeezes on this instrument. This is the Mag7 Index. You can check out last week's video. The formula is going to be included in the description there. But the quality of this squeeze is also very, very neutral, right? It's actually a -9. So you can see here that these are not particularly strong readings. And you can also see the length of the squeeze. And unlike a lot of folks, I actually don't like really long squeezes. I think that really long squeezes can actually be counterproductive and actually fire against the grain, which would be, in this case, you have an uptrend here. Although not much of an uptrend at the moment. So I am a bit concerned here about the length of the squeeze. And also be aware that there is actually a new squeeze building up over here on the weekly chart. So in the event that there's something good that happens, that would start to trigger these squeezes very, very quickly. As it sits now, I don't necessarily see a ton of advantage in diving head first into the weekend with neutral squeezes across the markets and in the most important chart, which is right in front of us here. So this is really more of a continuation of the shorter term trading perspective, because if there's lack of clarity on the daily charts, or if the daily charts are just neutral, then you have to try to find clarity on the smaller time frames. So you can find clarity on like a 15-minute, day to day, up or down. You can find clarity on a 5-minute, again, day to day, up or down. And neither side has been proven correct, right? You can see here that we're just kind of in this very big, kind of funky box there on the mags. The best play I see here is actually waiting for a move up or down, and then just playing it really aggressively with size out of that range, right? Because whatever direction this decides to go, and again, the bias does have to be higher, although it's not super comfortable because the scores aren't particularly good. But whatever direction this goes, it should go there quickly, and it should go there in a big way. So that's kind of maybe the main takeaway from today's video, is a little bit of patience with the ability to jump in with some reasonable size once we get a more directional movement from the market. So if we go over here to HYG, we're just going to use this as a proxy for the bond market. Again, up on this chart is usually risk appetite, and down on this chart is usually lack of risk appetite. And again, you end up with a neutral chart, right? This chart just hasn't gone anywhere. It's basically been kind of oscillating around the same level for many, many months. And you are now building a weekly squeeze. Again, the weekly chart, much like the rest of the charts that we've looked at on a weekly time frame, implies higher. So that colors the fact that this is neutral. So I do have to skew it higher as well. So I would still say this is on the bull side, but it's not like screaming on the bull side. It's just leaning to the bull side. So let's check out the VIX. So for now, the VIX is kind of just in this comfortable level. I don't really see anything up or down there. Let's look at the VVIX, which is the VIX of the VIX. Sometimes this will give us a little bit more of a clue as to what the VIX actually wants to do. And this one's also just dead in the water, not giving anything away. Just continues to coil. I would start to get concerned here in about 2 weeks, just based on the squeeze histogram on the weekly chart. It looks like within about 2 to 3 weeks, the VIX products will be back to neutral, and that's when they're at their most dangerous. So that would be basically right after February OPEX. So ideally, we see a pop into February OPEX, and then we can see something much more dramatic after that, but not really giving anything away here on the VIX as well. So I do have to go ahead and just cut the video there, I suppose, because we've looked at everything, and everything is telling us the same thing. It's neutrally bullish chop, right? So it is choppy, it is neutral, it leans bullish. Also keeping in mind that 2-3 bad days in a row would bust these patterns. So it's not like it's in trend and can handle a very strong pullback very gracefully. Let's go ahead and close here with some crypto. And again, you might be able to front run this before I even tell you, but imagine my surprise that crypto has done absolutely nothing. So you had a very big drop, last week. Nice big wick candle, nice recovery candle, and then basically this week has done absolutely nothing. So the level that I'm looking at here for a close on Bitcoin is going to be below 96,000. If it closes below 96,000, I think that would introduce some problems. And I think if it closes above 103,000, that introduces a little bit of vibrancy to the upside. So I'm thinking that this weekend could be positive for Bitcoin. I'd like to believe that based on some of the signals that I'm looking at. Typically, Bitcoin and crypto in general likes to move over the weekend, and usually in a big way. But I also would not be surprised to come in on Monday and see this at 90,000, or to see it, at 105,000. So it's kind of anything goes here with the crypto market, because it's, again, just neutral. So we'll just have to wait and see. And I think crypto in general is going to follow the stock market and vice versa. So if one breaks out, the other will try to break out. And we'll see if Bitcoin can come in with a leadership role next week, or if it decides to come in at 90,000 and make everyone cry infinite tears. All right, guys. Well, that's my time. Not a particularly exciting update here. I mean, everything that we've talked about for the last 3 weeks is basically still the status quo for now. So we'll continue to make the adjustments that are necessary, which is to trade smaller term time frames and really try to focus as much as we can on things that have alignment between the sector and the stock. Some of the best sectors right now continue to be something like communications, financials, certainly. So continuing to focus there, and then finding good spots continues to make the most amount of sense to me until something else changes and we get a new setup. All right, guys, that's my time. If you're watching this on the YouTube, drop us a like, drop us a comment if you have any questions, and I'll come back next week and answer any questions if there are any. All right, guys, have a great day. Cheers.